course the scene.
Hello, good afternoon. Welcome to today's webinar, streamed live here from our Nairobi office in Kenya. I'm glad to be presenting this webinar to you today. It will be a very interactive session today to be able to understand a few things regarding a very important topic, purely taxation. Basically, the objective of this webinar is that by the end of it, we should be in a position to understand a few things which are very crucial in terms of record keeping, to understand how the users will be keying in the data. Then from there now we look at the reporting part of it to understand at the end of the period, where can you go to the system to prompt and understand the tax position you have, whether you're supposed to be paying your liabilities and what amount is it and things like that. Then finally, the key important thing as well is to look at best practices after posting the tax period or after posting the tax return at the end of the month or quarter, depending on your position at the moment, where you are at the moment. Basically, a key point as well to point out is that with this webinar, we're not going to be addressing specific localizations because we want to address a wider audience that is tuned in. So we will not be talking about the entire localizations, but we'd rather be looking at generally accepted principles that are supposed to be involved as far as taxation is concerned. So without further ado, I think I'll get into the presentation today so that we can be able to kickstart this.
Acha pause hapo, kamera imeanguka. Ndio pia mali ya thinking of this call. Bado kwa call. Niko training. Akida hao wala kui toa image tafadhali. Na bado niweke hiyo mimi.
Tima.
Rudi kwa. Ongele levi. Akianza tu angalia kamera. Hapo. You're just looking at Levi's subconsciously, sawa? Rudi kwa simu.
Sawa.
Angalia Levi's like directly.
Yeah, I'm trying to maintain a contact na camera. Maybe Levi itamekaa hapo, but anyway, fine, sawa.
Haina. Rudi kwa the full camera.
Yes.
Tuone because ina change position kidogo.
Fatima.
I'm not gonna transcription hang up for camera.
Things are boiling nicely. It's not easy.
Tuanze tena. Ndio naangalia kidogo tu. I guess that is. You camera umeweka tight too. Nimeikaza sasa. Uko na kibu kwa pocket wangu? Kuna simu kwa pocket.
Niko hapa.
Simu utampatia Lewis.
Sawa. Hiyo time ndio.
Tuweke silent kila kitu.
Tuanze kupigiwa na macustomer hapa JTL. Ni JTC.
Sio cool alafu hii ni wewe.
Give me a minute.
Tuone kamera.
Just testing it out.
Yeah. So, yeah, okay, so acha nimechini try contact.
Take it for now.
So we stop stream and start again.
No, let's just
We just proceed.
proceed.
So I start afresh.
Yeah, with the intro. And with the mic muted.
Hello, good afternoon. Welcome to today's webinar. We are streaming live from Odoo offices here in Nairobi, Kenya. It's a pleasure to be hosting you today to be able to understand a few things about a very interesting topic, taxation. So basically the objective of this webinar is that by the end of it, you should be in a position to understand a few crucial principles that will assist you navigate your tax experience in Odoo. So basically the first thing is to understand basic record keeping, meaning how are you dealing with your invoices and are you capturing the tax correctly? What are the configurations you require and things like that? Then from there, you're going to look at the reporting part, meaning understanding now what are your dues or what is the tax position at the end of a period. Then finally, which is now most even important, is to understand best practices after a period has already elapsed. What are you supposed to understand after the tax period has elapsed, rather. And from there, I think that is the main objective of this webinar. Then just as a pointer to understand that with this webinar, we're not going to be addressing specific localizations, just ensure that we accommodate all the viewers we have tuned in. So it will just be a webinar to understand the general accepted principles of taxation that will assist you navigate through the system. Then now from there, we can always schedule specific webinars that are purely for our localizations in the near future. So basically, without further ado, I could simply introduce myself. My name is Muyanzi Wallace. I'm a business analyst here at Odoo. And being a business analyst, my role is to simply implement projects through understanding clients' requirements and configuring the system better to suit the requirements. And I would also be in a position to also submit feedbacks to our product owners so that we can be able to improve our product and serve as many people as we possibly can. So that's my role as a business analyst. And we could now proceed to what my agenda of today's webinar is, which is now understanding the first part of the things is to ensure that we understand what is Odoo as a product. So I'll simply be introducing you to Odoo as a product so that you can understand what tool it is and what is it meant to achieve and how can it be of added value to your business. Then from there, we're going to look at the basics of tax reporting so that you can understand, as far as we have Odoo to assist us do it, then you're supposed to be also understanding the very basics, even outside Odoo, to just understand that this is how it works. Then now from there, now you can now move into the system so that the system can provide added value in terms of efficiency on how you manage it. Then the next thing would actually obviously be to look into a demo, whereby now I'll get the opportunity to actualize what I'll have spoken about just above. So I'll get the opportunity to at least explain a few things as I now get hands-on into the database, to just give you a feel of what you're supposed to be doing. Then now we can finally conclude. Then I'll be in a position to address the Q&A session, which will now have populated in your chat section as we proceed. So the first thing is basically what is Odoo? As you've already seen, that's the first agenda of the webinar rather. So Odoo, as it's listed here, it's an all-in-one management software, which is beautiful and easy to use. And by that, we simply mean that Odoo is a suite of applications. It's an all-in-one management software. It's a suite of applications which is integrated together to ensure that it satisfies as many business needs as possible at one go using one tool. So it's an all-in-one management software where you can have all your activities centralized, which can assist you in managing your operations effectively. Then from there, you're supposed to just understand briefly how can Odoo help your business then. So how Odoo could simply help your business is that by having that approach of having so many applications suited together, then you realize that you'll be saving a lot of time through efficiency. For example, if you have different tools or you have different standalone software to address different requirements, then with Odoo you have one centralized tool so that you can ensure that you understand a few things together rather than having different tools for different requirements. Then it could become a bit time consuming, it could become a bit confusing to the end users, and many a lot of disadvantages as well. So it's just good to have centralized applications to increase effectiveness and efficiency of your operations. And then the next thing now we could look at is simply now demystifying tax reporting. By demystifying tax reporting, we simply now mean that now what can we understand about it, what is involved from a very basic concept, so that now we can actualize the concept into the database. So the basics of tax reporting is that, first of all, like any other business, you would sell things, and at the same time, you would buy what you'll be selling most of the time, most often than not. So we'll have sales and purchases as the key transactions in a business, but we could always have so many others. But as the two key transactions, which is basically sales and purchases, for example, if you are a VAT registered client, or rather you're a VAT registered customer, then you realize that you're supposed to charge value-added tax on your sales. At the same time, you are supposed to incur value-added tax on your purchases. So for that instance, you realize that for VAT registered businesses, the sales revenue is classified into two things. You realize that you have the base amount of the sale, which will be recognized in an income or a revenue account. Then now you'll be having the tax amount of the sale, which will now be classified in a tax received account. Then the same correspondingly applies to purchases, whereby for any VAT registered business, then the purchases will be, the gross amount of the purchase will be split into two, or will rather be classified into two, whereby you're going to have the purchase amount, which is now purely now going to be taken into the purchase account. Then you have the tax amount, which is going to be put into the tax paid account. We're going to evaluate this further as we proceed in the meeting, in the webinar rather. Then, as far as that is concerned, we are going to understand Odoo's taxation architecture, meaning how is Odoo built to address the requirement as much as possible. So as far as this is concerned, when we get into it, we'll understand that we have three things to understand as far as the architecture is concerned. The first thing you're supposed to just keep in touch with is localizations, meaning we have as many localizations as we possibly have right now. But what happens is if eventually you have a localization, then the whole point is that Odoo will be in a position to do most, if not all, of the configurations you require to use Odoo accounting for your taxation. So with the localization, Odoo will predefine the necessary accounts that you need, and it will do the right configurations for you. But in the event you don't have a localization, you just have to configure the system better, which you're going to understand how you're going to do it in the demo section. Then from that, we're going to look at now your accounts, meaning that what is Odoo's approach. So compared to many other solutions, Odoo tracks the input tax and the output tax in different accounts. And this just assists us evaluate and determine the performance of these two sections separately in an easy manner compared to if you had only one account tracking the balances. Then another key thing that you're supposed to understand is purely now the reporting part of it, because at the end of the period, what you don't understand is the tax position of the business at the end of the period. So how is Odoo determined to do that? Odoo provides a tax report that you can be in a position to understand and ensure that this is the position of the business at this particular time as far as taxation is concerned. So those are the three things you're supposed to understand. Then from there now, without further ado, I think I could move into the database to ensure that we actualize exactly what you have been speaking about and understand a few things that are necessary for your configuration. So as I move into the database, or as I rather navigate into the database, you realize that we have a set of applications, as you've already seen. We have different applications to solve different requirements. The subject of this webinar is purely the accounting application, majorly, where we're going to be dealing with exactly the agenda of the webinar. So when you get inside the accounting application, there are a few key things you're supposed to understand before we move into the transactional data. I'll come into the configuration menu, then I'll go into the settings menu here, where I can be in a position to explain a few things. So in the event you have a localization package, you'll simply install it here. In the event you don't, the options are you could either just install your own chart of accounts, or you could use a generic chart of accounts that is also provided by Odoo as well. From there now, the next thing you're supposed to understand is the tax return periodicity. And with the tax return periodicity, what do we mean? We mean you'll be getting your tax position at what intervals, or at what times rather. For example, for my case here, I realized that the periodicity is monthly, meaning my taxes will be computed monthly into the database. So setting the tax periodicity assists you as a client to determine the right tax amounts in the right tax periods based on where you're tuning us in from. Then the next thing to understand is the reminder. Odoo has a reminder mechanism which can remind you when the tax report is due. For example, in my case, you can see I've just put 7 days after the period. This simply means that when that period elapses, the system will provide a reminder to you to ensure that you have done your taxes correctly on that period. And that reminder will come as an activity on the top icon, where you can see some activity icons here. When I click here, I can see some things I'm supposed to do as a reminder. So basically, the tax periodicity or the tax return date, in the event you've forgotten it and the reminder is set, then you'll see it among the list of activities. Then the last thing to understand here is journals. So my understanding, your understanding here is supposed to ensure that for journals, I have set a specific journal to capture the tax entries. Why is this the case? This is the case because if I put a generic journal there, then it could be a bit difficult to distinguish journal entries relating to taxes and any other journal entry in the database. So it's purely very prudent and very important to ensure you just have a journal specifically for tax management, so that you can be able to understand you can be able to have a distinction between the tax entries and any other entry in the system. Then apart from that, I believe you just have the other basics, like ensuring you've set the default taxes correctly. And the purpose of setting the default taxes is just to ensure that whenever you configure a new product, you may not really have to create a tax for it or to pin a tax to it, but rather the system will pick the default tax and put it on the product. And with that particular subject, I would now head into a product to just show you exactly what I mean by this. Then now we can get into the transactional data. So when I navigate into the product screen, or the inventory form where I can see my products, you'll see I have a few dummy products here, for example. For example, I have agricultural seeds, for example. And I can see for agricultural seeds, I can see these are exempt based on the example that I have here. So the purpose of me having you here is to just ensure that for your product, ensure you understand the category of your products, whatever jurisdiction you're in. If the product is exempt, you ensure you've filled in the fields properly so that you can have the right tax computations and things like that. So for my case, for instance, agricultural seeds are exempt from where I am. So I could pin the right tax at that point. Then I could navigate to another product. For example, I have, clothing, for instance. And clothing, I've put 16% here, for example. Then I could have safety equipment. Safety equipment is a zero-rated product, for example. So I've ensured that I've put the default taxes here correctly. So apart from that, I believe that is it. Now we could even go back to the accounting application so that you can take it further from here and look at the data itself now. So when I come to the configuration menu, I'll navigate through taxes to where the taxes are. So as a simple revisit, if you have a localization, then all this will appear by default. There you can just see here. But in the event you don't have a localization, then you'll have to define your taxes and configure them from scratch to ensure you have all your taxes in place, and then you can be able to utilize them. The key thing I would like to emphasize at this particular point, or rather to point out at this particular point, is that you're supposed to ensure you understand the distinction between a tax and a tax group. This is very, very vital in ensuring you have the right tax report at the end of the period. So the distinction between a tax and a tax group is basically that a tax is simply the tax itself. For example, here you can see 16%. This is the value added tax itself. And what happens is that the distinction between a tax and a tax group is that a tax group is a combination of several taxes which are related, or I could say which are kind of related or linked together, for instance. A good example I could provide for this is, for example, we could have different types of value-added taxes. We could have a general value-added tax, which is 16%. Then just for instance, we could have value-added tax specifically for petroleum products. Then you could have different value-added taxes, but all of them could fall under one group called value-added tax group, for instance. So this is just to ensure streamlining as far as your reporting is concerned, as you're going to evaluate it. Then another key thing you're supposed to understand about the distinction between the two is that for the tax, you'll have a tax account pinned here, which will now host the value of the amount. For example, if this is a sale I'm making, it will be posted in the sales tax control account, which is usually a liability type of an account, because once you sell, you'll ensure that this is a liability you're supposed to submit to the authorities. So a few things here and there you're supposed to understand, especially if you don't have a localization, you're supposed to configure it from scratch. There are a few things you're supposed to juggle around to ensure you get the account types right, such like things. On the tax groups as well, you'll realize that when you navigate into the tax group, just as you saw there is an account in the tax, you'll also see an account in the tax group. So what's the relevance of this? If I had already posted the amount in the tax, if I had already posted the account in the tax, then why do I need to have an account in the tax group? I need to do this because when the amount is posted in the tax itself, when I'm closing the period, I'm supposed to understand the difference between input tax and output tax and get the difference. The difference, whether it's a payable amount or whether it's a claimable amount, it should be posted in either of these two accounts respectively. For example, if I'm supposed to pay it, it will be posted in the tax payable account. When you just hover your mouse around it, you'll be able to see. Then when you're supposed to rather claim, it will be more in the tax receivable account. So just with many more things to understand, those are the few things I could provide at this particular point before I move into the particular demos. So as far as the demo is concerned, basically now we have, in my example, I have a list of invoices here, and I also have a list of vendor bills in my narration here. So what happens is, after you already have the transactions, basically the process of having the transaction in Odoo is just straightforward, the way you would create any other invoice. For example, if you get into an invoice here, I say I have the few products here, together with the tax amount here. Then when I come here to vendor bills, the process is just the same to ensure you have the transaction in place. You just create the vendor bill just as normal, for instance. Then the next thing you want to understand is that after I've already created the invoices and vendor bills and the data entry has been done, then at the end of the period, how can I understand my dues? How can I understand what I'm supposed to pay or what I'm supposed to claim rather from the authorities? And that's what leads us to the discussion of a tax report. So the first thing is just to ensure that the entry is correct, ensuring you have the right tax on the product, and the nitty-gritty here and there. Then now from there, now you can now be able to once the data entry has already been done, meaning the figures have already been populated through invoices, now you can be in a position to now understand your tax liability at the end of the month. So for example, for my case here, I have a single invoice and a single bill for March. Right? And when I have a single invoice and a single bill for March, then I want to close the tax report for March to understand the position for March. So what will I do? I'll come to the reporting menu, then I'll navigate to the tax return section. Then when I navigate to the tax return section, what will I do? I can filter by March, the period that I want to deal with. When I filter by March, that is exactly what I'll see. I'll see that the tax I've charged on my sales is 160. The tax that I've been charged now myself based on my purchases, they're 80. So ideally with this scenario, I expect to be paying the authorities 80. But the system should be in a position to compute that for me. I shouldn't be computing it by myself. But even before I show you how the system computes it, I would like to just point out a few things at this point. Is that with this approach, you realize that even before closing the tax period of March, I have several filters here that I could use to really assist me understand the position. For example, I have the comparison filter here. So right now I've put it to no comparison, but alternatively I could compare the current period, which is March, to the previous period, which is February, for instance. So you can see here that these are the results for February, these are the results for March. it could assist you in strategically planning and understanding the position really from a longer term perspective. So you have the filters here. You can navigate based on how you really like it to happen. For example, you could say same period last year. For example, if you're a seasonal business, you want to understand if I sell more things this February, how is it compared to last February? So you could navigate to the filters accordingly, but I could just leave it at that point. Then another important thing you're supposed to understand here, which is not really the subject of this webinar, but just to point it out, is that in the event you're in a multi-company setup, then one company is the one that is supposed to be subjected to the reporting part of it. Then you ensure that you have configured your tax units correctly, because several companies that file tax together are what you call a tax unit. So for example, when I come to configuration tax units, I could be able to be in a position to, for example, right now I'm in a multi-company setup, so I could be able to be in a position to specify which two companies, and I could specify the main company, which now purely now files the tax. So that when you come to the tax report, when it comes to the tax return rather, here you can see, I can pick between one of two things. I can pick company only, meaning I'm only filing the tax for this particular company alone, or I could find group reporting, whereby it will navigate through the other companies and put the tax results together in one tax report. But that's not the subject of this call, of this webinar rather. I just pick the company only. Then after doing that, I think the next thing I would do is to simply now close the tax report. And when I close the tax report, what you'll eventually see is a tax journal entry. And based on this example, you realize that, especially for the transactions for March, I was supposed to pay 80 to the authorities because the input tax was 160 and the output tax was 80. So the net effect is 80. But you realize that here I have a VAT payable of 320. This could simply mean that part of the tax for February, I have not paid it yet. So the results in the VAT payable account are accumulating as I proceed. So you just ensure that before going to the next month, if you've already paid it, then you'll have to ensure you pass a payment in Odoo as well to clear the amount in that account so that you can get the right thing. For example, right now here, through this database, I had not paid the tax for February, but now I have the tax for March. So the payable account compares the two and gives me a total result of a VAT payable of 320, for instance. Then here, I think what I could do is to just ensure that as far as that is done, I would now consider posting this entry. So I just post this entry. Then immediately I post this entry, you realize that a tax return has been created. And in the event I visit my balance sheet to confirm the impact of that, then I could always come to my balance sheet. Then I could always navigate downwards where we have tax liabilities here. Then I'll find my VAT payable amount here. Then now from there, you can be able to settle it in whatever means. For example, if your legislation requires you to settle it maybe 10 days after the end of the month, 20 days after the end of the month, depending on where you're tuning us in from, then you can be able to create a payment, then settle that liability amount, or reconcile it to that liability amount, then you settle the tax amount. So that's the second part of the agenda, to ensure you understand how to report and how to do the data entry as a basics. Then now the third thing, which is not even now one of the most important, is now what are the best practices after this exercise has already happened. So after you've already closed the tax report, or you've already closed the tax period, then the first thing to understand is, after you have done this, then you would not want anyone to go back and tamper with the records that you have already done, right? Because you realize that you've already filed the tax then. So you not want someone to go back and start tampering with the invoices and the bills of an already locked period. Then for that, I would simply introduce you now to a functionality called lock date, for example. So when I can navigate to accounting lock date, I'll find a tax lock date, lock tax return, for instance. So immediately I close the tax report, this field will automatically be populated because I've closed that period. So this field will automatically be populated. But you realize we have a lot of things you're supposed to understand here. For example, we have lock sales. These unlock purchases, I could just jointly talk about them together, because you realize that if you're dealing with many sales and many purchases, then, for example, before the end of the month, for instance, if your tax periodicity is a month, then you realize that once you get to, for example, 26, then you realize I've done all my sales. So you could consider looking the sales at that point, but the rest of the transactions are proceeding. If you're purchasing, you can purchase and things like that. So there's a flexibility of locking only particular transactions, because the sales will only lock transactions in the sales journal. The purchases will only lock transactions in the purchases journal. then our tax return lock date will now lock, I could say, conclusively everything, for instance. Then, apart from that, I would say, in the event there's not really the right term, but in the event you have forgotten to post an invoice in a period that is already locked, then how would you do it? Because you realize that right now, after I've already locked March as a period, in the event I come and create an invoice for March, just presuming the user had forgotten to key in the invoice. So in the event I come here and create an invoice for March, I just come here and for example, I just duplicate an existing record and I put a date for March, for instance. I just come say December or March. I say March 14th, for instance, just random. So in the event I want to create an invoice in a period that is already locked, unfortunately, the system won't allow me to do so because the period is already locked and you don't want to tamper with anything in that period. Then for that instance, in the event it was an accident that the user actually forgot and it's a genuine invoice, then what you'll do, you'll have to create an exception that the accountant can create an exception for himself that he can be able to post that entry. Then now you can proceed with the normal activity. So how you can post an invoice like this, for instance, is you just have to ensure that when you come to accounting and you come to lock dates, we have a tax return lock date of 31st March. So the accountant could come here because this dialog box is purely people holding the accounting roles, the accountant role in Odoo. So the accountant will come here and provide an exception to himself. He could say that perhaps if this invoice was for 26th, for instance, and they already locked the March period, they could just switch the lock date backwards to 25th, for instance. Just allow me to post that transaction, then you can be able to proceed normally. So by switching the return date backwards, the system creates an exception for me, right? For example, I would say it's just creating an exception for me for 5 minutes because I just want to record an invoice that was forgotten, then we proceed. So you notice that on the exception screen, the exception can either be for me or I can do an exception for everyone. But I can't really do an exception for specific users, not really. It's either for me to record it or I either allow everyone to do everything that he had forgotten. So you're supposed to be a bit careful as well at that point. Then I could just simply note the reason. I could say the reason is forgotten invoice, for example. Then after doing that, after creating an exception, I save. Right? So after doing that, in the event now I want to confirm this invoice after creating an exception for myself, I believe I can. For example, if I come here and say March, our period was March. I say March 29th, I confirm. I believe I no longer see that banner because I've created an exception for myself to post that record, so no one else can do that exception. So after doing that, the next thing you'd like to know is you'd not like to encourage this, that each and every time people always create exceptions and record transactions. So you'd not like to encourage this as much as possible. So you need a mechanism to track and understand who is creating exceptions, at what time, and why are they doing so. So in the event any accountant creates an exception in your business, perhaps if you have more than one accountant, for instance, in the event this accountant keep creating exceptions, then you need a mechanism to track and understand why are they creating exceptions, what is the frequency, and things like that. So exceptions are tracked in an exception report, which you can find, not really a report, but rather a menu item where you can find it. When you come to the settings application here and you come to the company record. When I come to the companies and I pick my specific company here, I realize that I have an exception was created for forgotten invoice, as you can see here. So you can always keep track of the charter in the company form in the event someone creates an exception at the end of the month. It will always be populated here. Then when you view the exception, you'll always see he created the exception on what date and the exception lasted for what time. Because for my case, the exception took just 5 minutes because he just wanted to post an invoice, then you proceed. So you can see that it was created at 11:57, for instance, and the end date is 12:02. So it's just 5 minutes to allow him to do it. Then in the event you want to understand what exactly he did in that exception, now that's when you can drill down in the audit and exactly what entries he did during the exception, because now you don't want to understand what exactly happened. So you could drill down into the audit to understand exactly what happened during that exception period alone. Then from there, I believe now the next thing to do is that after you do that, then you can be able to be in a position to now come back into accounting and ensure that because you had already posted an initial tax entry, then you had forgotten an invoice, then it means the initial entry you had posted was wrong then because it did not have something because you have posted a new invoice after you have already locked the period. That means that the tax report you had initially pointed out, which we had initially posted, was wrong because it lacked a single invoice, for instance. So you realize that you'll have to nullify the initial tax report that you had done, then create a new one, which now incorporates what you had already forgotten. So to do that, I'll simply come to reporting. I'll come to tax return here. The tax return for March, when I come here, I click on closing entry. Definitely I'll see I had already posted a figure of 320 as the tax liability at that time. What I need to do is that I already know this is not accurate because I had forgotten an invoice which I'm supposed to now post now. So I just have to nullify this tax report. I just nullify it. If possible, I could even do away with it. So setting it to draft is enough, but I could possibly even just delete the entry because I want to create a new tax. I want to create a new tax report for that period. So after doing that, I could be able now to close the report again. Then when I close the tax report, you can see now it has incorporated the new tax figure now I have for 80 as the payable. Then I can now be able to post the entry. Then after posting the entry, I believe that should be it. So you have already incorporated the new entry and you have for 80 as the new tax liability amount. So that's the first practice you're supposed to understand. And how can you deal with post-return periods? The first thing you're supposed to understand is that. Meaning how can you avoid new records being factored in. And the second thing is to understand for the already existing entries, someone could always go and try to edit it. For example, if it's an invoice that you had already created and you already posted, someone might go and try to update it, or rather someone might go to change it. And especially this happens for the countries which are using electronic tax management systems. For example, in local country here, we have eTIMS, for instance. So the event someone posts a transaction, then you'd not allow someone to go and tamper with that invoice again. So you realize that we need to ensure that we lock the specific invoice as well to ensure that no one can be able to go and reset the invoices to draft, play around with them, and any sort of thing. So to do that, you just ensure that first things first, you'll go to the journals. It says journals, so you can just come to configuration, I'll come to journals here. Then under the journal that I want to deal with, for example, if that is the case, customer invoices, I'll come to the advanced settings option. Then I ensure I secure the posted entries, because if I don't secure them, someone needs to go and play around with them in the wrong manner, for instance. So you could consider securing the entries so that no one can be in a position to edit the entries that have already been done. So once I secure posted journal entries, the system encrypts this invoice with a certain technical code so that in the event someone tampers with the invoice, it won't allow him to do so. So for instance, if you've already secured posted entries with hash, I believe when you come to customers invoices here, then in the event you try to create a new one, for example, the entry right now, for example, if you want to create, let me just duplicate a new invoice here. When I confirm this invoice, just for instance, I'm just getting an invoice here. March, yeah, for instance. Though March is a period I've already locked, so I could just do in April because it's a concept I want to explain. So once I confirm the invoice, you'll realize that as far as you're concerned, you can see this icon here which has a padlock. So in the event that I fully confirm this invoice, then I close the tax period, this invoice will never have this reset to draft button because now you do not allow users to do that. Alternatively, another solution to this is to simply ensure that because this approach of locking entries with hash could be a bit stringent, meaning you'll either, if you want to do amendments to an invoice, you'll have to create a credit note. Then that would simply mean that we have another option. When you come to accounting, we have what we call secure entries. Secure entries, the difference between secure entries and locking entries to what you've already talked about previously is that secure entries, what it does, it ensures that when I click on secure entries, you can put a flexible date that you want to secure entries up to what dates. You realize that with the previous scenario where we are locking entries, you are locking everything at any point in time. But with secure entries, it just gives you the flexibility to ensure that you just say you want to lock entries up to this particular date, for instance. So it's just a flexibility which is alternative to the previous one, where I think the previous one is what has been used in recent years, whereby users have been locking entries. But right now, especially from Odoo 18, is where we have secure entries, whereby now after you've already created your transactions, you can be in a position to now secure entries up to a specific date. Then I think that. So as far as that is concerned, I believe that is just a few tricks and tips here to ensure that you have your data correct, because why we secure entries is to ensure integrity of financial data. Because once the financial period is closed, then you cannot be in a position to go and change things. It's also part of compliance with audit requirements in some legislations, because you're supposed to ensure that once a transaction is locked, then you should be tampering with it. Then it's also just a mechanism to ensure error prevention if the event things happen. So I believe that's the real importance of the final part of the agenda, to understand the post-return, what happens post-return, what are the key things you're supposed to understand after the tax return periodicity has elapsed. So with that, I believe that is the part of the demo that is supposed to be addressed. Obviously, we could talk about it all day, but I believe that we have met the agenda of the webinar as far as that point is concerned. And at this juncture, I would now like to visit the Q&A section to understand whether I could answer a few queries that you could be having before we call it a day. So I just simply navigate to the Q&A tab where I'll see if there's any questions. So I believe there is none. I cannot see any question there. So as far as that is concerned, I believe we can close the webinar from there. It has been a very interactive session. I believe you have gotten as much value as you possibly can from today's session. And I would like to wish you a great day ahead. Thank you so much. Obviously, there are some things that are supposed to improve, but